Daily Bread with Tom Hartman for October 27th, 2025. Here are today's stories. Well, first up, we have what looks to be a massive potential for a short squeeze in oil happening here. So this story comes from Bar Chart, who says that hedge funds have now built the largest short oil position in history. Perfect time for a short squeeze. So hedge funds have built the largest Brent oil short position on record in late October 2025, peaking at over 200,000 contracts just before U.S. sanctions on Russia producers Rosneft and Lukoil triggered a sharp rally, as shown on ICE data and Bloomberg analysis, setting up a potential for a short squeeze. So there are oversold conditions right now in oil markets where sanctions disrupted supply narratives of global glut, forcing traders to cover amid a 5 to 7% price surge to $75 per barrel within days. Now, it does, I find it interesting on the macro scale that oil was oversold the way that it was to begin with, right? This is stuff that you see when you're headed into recessionary territory. Oil is one of those things throughout the supply chain that's used everywhere, from manufacturing, from mining, all the way down to transportation within the middle, all the way down to consumers who are driving or traveling or heating their homes or whatever it is. And so, if you have an abundance of oil and oil is now priced lower, that's an indication that there's a slowdown within the economy. But that does not mean we can have these rallies that could be pretty lucrative for people, or you can catch the upside of that, especially when there's news, some sort of macro news that comes and hits it, because oil is a very macro sensitive item. So I thought that was pretty interesting. Moving on, our next story is here about Amazon planning to lay off 30,000 people. You've probably seen this floating around the FinTwitverse, but this comes from Daniel DiMartino Booth on X, who says that the the figure represents a small percentage of Amazon's 1.55 million employees, but nearly 10% of companies' 350,000 corporate employees. This would represent the largest job cut at Amazon since 27,000 jobs were eliminated starting in late 2022. So that is quite a bit more. Um, What's interesting to note here is that the layoff scene. So again, if you're looking for warnings for a recession, you're looking for job losses, cumulative job losses. So in addition to Amazon, we have this year we had Meta had 8,000 jobs gone, Intel 24.5 thousand jobs, UPS 20,000 jobs gone, FedEx 9,000, Verizon 11,000, Microsoft 15,000, Citigroup 20,000, and the list keeps going on and on and on. Not only are we having these job losses, the expectation is that these jobs aren't going to come back. If there's a story floating around that Amazon wants to automate 75% of the workforce, and Amazon is one of the largest employers worldwide. So this is pretty significant. We are in the age of transformation, forth turning new institutions, new systems, and we might have to learn how to live completely differently. Also, in the short term, if the unemployment number ticks up, we have what might trigger the negative story for the passive investing flows, passive investing that's happening from people who are investing every week or people who are investing through their 401ks. These are forced buyers, as denoted by Michael Green from, shoot, I forget the name of his company. It's from Tier 1 Alpha, and there's until Tier 1 Alpha. And the idea here is that if those forced buyers are gone and they become forced sellers because they need to sell off some of their holdings in order to live, well, you can have massive selling volatility within markets. All right. Next story here comes from, this is pretty interesting. So this is about the Trump's Fed pick. Right. So let's read what Jim Bianco from Bianco Research has to say. All right. I'm a big fan of two-way TV app. They have shown time and again that they understand. Oop, one second, let me just switch this. Oops, there we go. I'm a big fan of Two-Way TV app. They have shown time and again that they understand the vibe and think it in DC. They offered a different opinion from the repo story below. As they see it, the horse race to replace Powell. So just so you guys know, this is the story he's talking about comes from Nick Tamaros, who covers the Fed at the New York Times. So the typically public vetting process for Trump's Fed chair selection is officially down to 5, as reported earlier by CNBC's Steve Leisman, Bowman, Hassett, Ryder, Waller, and Warsh. This contest so far appears to have accomplished two goals: slowing down something that appeared to be speeding up in a possibly unhelpful way this summer and providing broader intellectual cover to the arguments behind faster rate cuts. So we head back to Bianco's post. He says, as they see it, the horse race to replace Powell in order. Besant, Hassett, someone else not on the list. They also noted that someone else could be Stephen Marin. I agree with Two-Way TV app. This might not be a simple process of narrowing the final 5 to 1. If it were, this would have been done months ago, and Trump would have appointed the next chair last month rather than Marin as a temporary governor until January. Trump, the person who decided, not Besant, really wants his first choice, Scott Bessent. The lengthy vetting process appears to be more about twisting Bessent's arm to agree, even if it means holding two jobs at once, Treasury Secretary and Fed Chairman, which would be just crazy that the Treasury Secretary would also be the Fed Chairman. I wonder if that's ever happened before. Trump wants someone he can trust to do his bidding and cut the funds rate to 1%. I'll burn him and won't make that mistake again. For two here, I would argue that the beta market is telling us what I described above. So in the chart below, we can see here that if we take a look at Polymarket, we have Kevin Hassett, who is the highest odds at 36%. The chart below shows Polymarket betting market for which of the final 5 will be the Fed chairman. The leader, Kevin Hassett, is the only person Trump really knows other than Kevin Warsh, who Trump has repeatedly passed over for positions in his administration. It is unclear if Trump has ever had more than a passing 5-minute conversation with the rest, if that. This matters. But note that Hassett is only trading at 36%. Restated, the betting market is telling us that there's still a 64% chance it will not be him. Up the last trade for the final 5 in the chart below, and it totals 84.7%, not 100%. I would argue that is a sign of the marketplace low conviction that one of these final 5 will get the job. Restated, it might still be someone else. In market parlance, short all 5, and you have a 15.3% bet that it will be the field, someone else. And all this up, and I will again restate the order above in my words. Will 2 months of twisting Bessent's arm get him to take the Fed job? If he wants, he can still be Treasury Secretary. If not, can Trump trust Hassett to cut rates to 1%? Or 3, find somebody else. This is pretty interesting. Like, all the signs are pointing that we're going to have just massive amount of liquidity injected into the markets, or try to inject into the markets, because Trump wants the markets to be up and to the right. Now, everyone wants the markets to be up and to the right, but Trump wants them up to the right very vocally, very publicly. And it's interesting. If Bessent is the Fed chair, then we don't have to necessarily worry about a conflict between the fiscal and monetary policy. We'd have a joining of the two. Independence of the Fed goes out the window, at least on the surface of it. And all of a sudden now, we don't have to wonder where rates will be. The markets will immediately, or could nearly immediately, reprice to a 1% rate. What does that do to inflation over time? What does that do to volatility within markets? I don't know. But at the end of the day, I do imagine that this is well in hand with the idea of refinancing the debt at the lower interest rate, and in pumping up gold as a safe haven asset, so that it can then be mark to market and collateralized, and that money used to buy Bitcoin. This all seems to be part of a larger financial plan in order to get the markets to where Trump needs it to be in the time frame that he wants it, which is fast. So this is crazy. This history book stuff here. All right. Our last story here is, again, Senator Cynthia Lummis. Just listen to what she has to say here, because I just can't understand that a senator is saying this. Here we go. Whether it's true or not.
I encourage people to buy and hold. I encourage them to say Bitcoin for their retirement, for their future. And that's because as the Congress spends trillions and trillions of dollars and is flooding our economy and the world economy with US dollars, there's no way that we cannot debase the value of the US dollars.
All right, let's start with the end first. The world is not flooded with US dollars. That's not the case. In fact, the world has been lacking US dollars for many years, since the global financial crisis, really. And we've seen the dollar go basically up and to the right since the lows of 2008. So it's not true that the world is awash with dollars. In fact, the very fact that there's not enough dollars going around is what causes a lot of the problems that we have on the global stage. There's a Eurodollar crisis, and you can find out more about this from Jeff Snyder and Eurodollar University. But also, if you just look at the charts, the dollar is not crashing. The dollar has just been going up for years. Second, she says, I encourage people to purchase Bitcoin for their retirement. Now, I love Bitcoin as much as the next average person, but this strikes me as unbelievably irresponsible from a senator. Bitcoin is a highly volatile asset that doesn't have 50 years worth of history, much less 100. And an 18-year-old going into the workforce now should put money into Bitcoin, thinking that this is the asset they're going to have at their retirement when they're 65. She can confidently say, "Hey, for 55 years, you don't have to worry. This asset's going to go up and to the right." Okay, and then the reason why she's saying that is because the government that she is a part of is debasing the currency. I mean, everything about this is wrong. I don't. I think she's. It sounds like she's saying this because she was told to say this, and she's parroting things, and she doesn't necessarily understand how bad what she's saying is. Stop the debasement. Don't say, well, it's going to continue for the next 55 years. Go ahead and put your money in a highly volatile asset that has almost no history. Oh no, this just seems bananas to me. So even though Bitcoin might be a long-term bet that's useful, the idea that someone of a position of authority would suggest that seems to be crazy without giving the caveat that, hey, this is dangerous. Where's her not financial advice? Do your own research. Oh my God. All right. Well, times are getting interesting here in the land of the fourth turning. I'll, of course, be back tomorrow morning with another daily bread going over the market news. But until then, wish you guys a good night.